Welcome to our platform, where we act as your financial compass, guiding you to understand your finances more intricately. In this video, we'll be delving deep into the subject of income-producing assets. We'll clarify what they are, how they work, and why they are such a vital tool in the financial world. By comprehending income-producing assets, you not only unlock a potential source of steady income, but also the ability to grow your wealth and secure your financial future. They are the bricks with which you can construct your financial autonomy and prosperity. So stay tuned as we unravel the details and help you build a stronger, wealthier future. So what exactly are income-producing assets? They are investments that generate a regular income for you. For example, there are rental properties, an appealing source of income where you earn a profit from tenants. This is achieved by charging more than your mortgage and other expenses. Then we have dividend-paying stocks, a type of investment in companies that literally pays you for owning a piece of the business. The more shares you own, the larger the dividend you'll receive. Bonds are another type of income-producing asset. These are essentially loans that an investor gives to a corporation or the government in exchange for periodic interest payments, plus the return of the bond's face value when it matures. Lastly, certain types of businesses can also be income-generating assets. For instance, owning a restaurant or a convenience store can yield considerable income if managed effectively. These are just a few examples of income-producing assets, each with unique characteristics and potential returns based on market conditions and your personal level of involvement. Income-producing assets are a financial powerhouse, offering numerous benefits that extend far beyond a mere steady stream of cash flow. Indeed, these assets can serve as a stepping stone towards financial stability. They can supplement your regular income, providing an additional safety net that can aid in navigating through financial uncertainties. This can be particularly beneficial during unforeseen circumstances, where an extra source of income can make all the difference. Moreover, income-producing assets are not just about immediate cash inflow, they are an integral part of wealth accumulation strategy. By consistently injecting the profits back into the investments, it's possible to significantly build up your net worth over time. These assets, therefore, offer a viable path to not only increase your wealth, but also sustain it in the long run. Among the many income-generating assets available, rental properties stand out. The process begins with buying a property, either a house, an apartment unit, or a commercial space, with the intention of leasing it out to tenants. By doing so, you can create a steady stream of monthly income. A single-family home, for instance, can rent it out to provide a regular, dependable return each month. Similarly, multifamily properties such as apartments or duplexes can provide multiple streams of income as each unit can be rented out separately. Commercial properties, too, offer vast opportunities for earning rental income. From small retail spaces to large office buildings, the scope is diverse. For instance, a strip mall could bring in rental income from various small businesses, while a high-rise office building could generate larger revenues, owing to the higher rent typically associated with commercial spaces. Beyond just the regular rental income, there's the potential of property appreciation. Over time, the value of the property may increase due to factors like improvements to the property, changes in the local housing market, or broader economic growth. This opens up the possibility of selling the property down the line for a substantial profit. In all, rental properties offer a multifaceted approach to income generation, combining regular rental income with the potential for long-term profit from property appreciation. An alternative path to consider in your investment journey is the world of dividend-paying stocks. Now, what are these exactly? These are shares or equities of companies that have a policy of distributing a portion of their net earnings to their shareholders, which is what we call dividends. It's essentially a way for companies to share their success back to the people who have invested in them. This distribution of profits usually takes place on a regular basis, often quarterly, although some companies may distribute semi-annually or annually. By purchasing and holding onto these stocks, you as an investor can earn steady dividend payments. The beautiful thing about these dividends is that they can be used in two ways. One option is to them back into buying more stocks of the company, leading to a compounding effect over time. This is a strategy often used by long-term investors looking to consistently grow their investment portfolio. Alternatively, these dividends can be used as an additional source of income, supplementing your regular earnings, or helping you reach your financial goals quicker. So, to put it simply, by investing in dividend-paying stocks, You're not just betting on the potential increase in the stock's price, you're also setting yourself up to earn regular payouts from the company's profits. Bonds, often seen as a staple in financial portfolios, serve as a vital income-generating asset. When you place your trust in bonds, you are fundamentally offering a loan to a government body or a corporate entity, expecting regular interest payments in return. This transaction can establish a dependable flow of income, particularly when investments are directed towards bonds of superior quality. However, it's worth delving deeper into the role of bonds as income-producing assets. Think of bonds as an IOU issued by a corporation or government. When you purchase a bond, you're essentially buying this IOU with the expectation that your initial investment will be returned to you, along with the agreed-upon interest, at a specified point in the future. This investment strategy is appealing due to nature. Unlike other forms of investment such as shares, bonds offer certainty in terms of returns. The interest rate, payment schedule, and maturity date are preset, providing you with a clear picture of the income you can expect. Bonds, therefore, play a crucial role as income-producing assets by providing a steady and reliable return on investment, which is especially beneficial for those seeking financial stability and predictability. To conclude, we delve into the understanding of how specific sorts of businesses can transform into income-producing assets. This is primarily because when you invest in a business, you are not just putting your money in, but also your time and efforts. As the business grows and starts generating revenue, it essentially becomes an income-producing asset for you. Take, for instance, owning a franchise. When you buy a franchise, you are buying into an already established business model, which reduces the risk associated with the uncertainties of starting a new business from scratch. This established business model might include an existing customer base, brand recognition, and operational support from the parent company. The revenue generated from the sales of goods or services in your franchise becomes your income. Another example is venturing into a rental property business. When you invest in properties intended for rental purposes, you secure a steady stream of income in the form of rent. This rental income can exceed your property's operating expenses, including mortgage payments, property taxes, insurance, and maintenance costs, resulting in a net income. Furthermore, as property values generally appreciate over time, you not only earn a regular income, but can also make a profit if you decide to sell the property in the future. In essence, owning a business can be far more lucrative than traditional employment, as it allows you to earn income not just from your personal effort, but from the efforts of others and the business as a whole. In conclusion, income-producing assets are a fantastic method for generating consistent income and creating wealth over time. They serve as the building blocks of a prosperous financial future. Whether it's through rental properties, which can provide a consistent rental income and potential capital appreciation, dividend-paying stocks that can offer steady payouts and potential for price gains, bonds, renowned for their regular interest payments and potential return of principal, or businesses, which can generate profit over the long term, these assets can provide you with a stable source of cash flow. Their importance in your investment strategy can't be overstated. Incorporating income-producing assets into your plan can diversify your portfolio, reduce risk, and ensure a steady income even during economic downturns. They can also provide a hedge against inflation, maintaining and potentially even increasing your purchasing power over time. Additionally, these assets can be reinvested to further compound your wealth. So, consider weaving income-producing assets into your investment strategy. Start your journey towards financial independence and begin building your wealth from today. Thank you for tuning in to Good Financial Sense. Don't forget to hit the subscribe button for more financial wisdom. Join us next time as we continue to help you navigate your financial journey. We are fully dedicated to help you make informed decisions about your money and to empower you with the right knowledge. Financial literacy is a stepping stone to financial independence, and we are here to guide you every step of the way. Your financial success is our mission. See you next.